so Liberty Energy, the Chris Wright, the CEO, has been nominated to be energy secretary under Trump's second administration. And so, Scott,
The first word I'd use to describe him would be outspoken. He's, certainly a character on every earnings call. Effectively, at the end of the call, kind of gets up on the soapbox and talks about the energy transition. And I think like he does acknowledge that it is happening on the one hand. So I don't think he's necessarily overstating his point, but he's certainly not reticent in call it pushing back on more extreme views regarding the pace at which that is expected to happen. He tries to inject reality into that story, time and time again, and is, an emphatic proponent of the oil and gas industry in general. And so, that Liberty has done quite well as a stock this year and last in a tough market environment. They're one of the major players in U.S. pressure pumping. They bought Schlumberger's North American unit a few years ago, and that kind of vaulted them into this top tier, along with Halliburton, Patterson, UTI, and ProFrac. And so, I was surprised to see the announcement or the appointment, but not, initially when I saw it. But it does make sense, certainly, given his, his proactive, like he almost has tried to assume like an industry leading role as a voice on this, a voice, what he considers to be a voice of reason in terms of injecting, reality and kind of diffusing some of the more extreme, while acknowledging that there is a climate issue, suggesting that it's not an emergency or kind of, refuting some of those types of claims. And so I would expect him to be a champion of the industry for oil and gas here in the near term, while advocating for that transition and leading that transition to some extent as well.
good morning, good afternoon, everyone. This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. On the call today, we've got three of our colleagues who are all in New York except for me. So just quickly around the room, we've got Vince Piazza wearing a lovely red Christmas sweater. Thank you for that. Over to Scott Levine, and then Talon Custer. Sorry I couldn't be there, guys. I hope you have a nice Christmas lunch today. So we're going to spend some time talking about outlooks for 2025 today. But before we get into some of the bigger picture stuff, I think it's always useful to focus in on some of our reacts, which for anyone who doesn't know, reacts are basically our rapid fire analysis. Just something happens at a company, and this is our first take on what it could mean. And so we're going to hit two of those. So Vince, just this morning here, ExxonMobil put out some of its long-term thinking. Tell us about what they put out and highlight some of your takeaways from the React you published earlier this morning.
Hey, great. Thanks, Rob. Good morning to everyone from rainy New York. Remember now, it's always sunny in Philadelphia, but it rains in New York. So look, I think we have talked about this ad nauseum. What consolidation allows is efficiency gains, productivity gains. It allows for greater concentration of assets. And what ExxonMobil gave us today was not only a 2025 outlook, but a broader outlook from 2026 out to 2030. And we're looking at reasonable production growth. We're looking at greater efficiencies and synergies from the Pioneer acquisition that they made and closed recently. What we're also looking at is a very reasonable step up in capital investment to take into consideration the integration of Pioneer Natural Resources. What's also very interesting is a very stout repurchase program, share repurchase program in 2025. A very stout view of earnings and additional free cash flow through 2030, which provides for considerable financial flexibility to make strong moves for returning excess capital to shareholders, but also other upstream acquisitions. At least that's my point of view. I think of all the integrateds that are out there, the integrateds that I cover, the major mega cap names that I cover. I think Exxon is really lapping these players, and it's really showing its strength and its longer term strength as well.
Okay, thanks, Vince, for that. We'll come back to some of those broader themes in some of our discussion here. But first, Scott, let's come over to you. You also had an interesting react, I believe, yesterday at this point on Liberty and particularly their subsidiary or their unit, Liberty Power Innovations and ProPetro, and how that fits into your thinking on the company. So tell us about your react.
Yeah, so both of these companies are pressure pumpers, and we put our outlook out in the market. Outlook is pretty weak, but ProPetro, as you point out, was up 20% yesterday, and Liberty was up 10%. And what happened was ProPetro announced that they were starting a new subsidiary that is going to provide mobile power solutions to their gas powered fracking fleet on the one hand, but it's also going to be provided to third-party customers. And so the read-through here is that may include data centers, and it may be a mobile solution that could be more nimble, say, than some of the more stationary baseload power solutions. And again, the read-through, I think, driving the enthusiasm for the stocks, all powered by AI, and which is obviously all the rage this year. But the point is that Liberty had started something similar a few years ago and has talked a great deal about it. They have not provided financial projections for it. However, what is interesting is on their third quarter earnings call, Liberty indicated they expect their CapEx budget for 24 to be down year over year for their pressure pumping business, but they would not comment on whether it would be down for the entire company, the implication being that they're increasing spending on the LPI unit you mentioned, Rob. And so I think this is going to be an area of interest going forward. We're going to do so much more work, I think, in terms of trying to frame this market for the pressure pumpers. And it all kind of ties back to the fact that the pressure pumpers are transitioning their fleets from diesel to natural gas and or electric power. And this is another business opportunity they can potentially capitalize that's tied in with those types of solutions. So a lot of interest in that story yesterday, as you point out.
Scott, I have to ask a follow-up, and forgive me for this, because so for anyone that doesn't know, I think BI covers 2,300 companies. You can't read everyone's research. You can't think about every individual's coverage. So even though I work in the energy patch, just like everyone on the call, I'm not always reading everything Vince writes, everything Scott writes. Apologies, guys, but I try to do my best to keep tabs. But okay, so Liberty Energy, the Chris Wright, the CEO, has been nominated to be energy secretary under Trump's second administration. And so, Scott, I'm going to put you on the spot. I know we didn't chat about this in advance, but given that he is going to be, or presuming he is confirmed, he's going to be energy secretary during the next few years. Can you give us a sense? Kind of what tell us about the guy. How has he done as CEO? Any insights you can share just on this topic, I think, would be useful.
Yeah, I mean, the first word I'd use to describe him would be outspoken. He's, certainly a character on every earnings call. Effectively, at the end of the call, kind of gets up on the soapbox and talks about the energy transition. And I think like he does acknowledge that it is happening on the one hand. So I don't think he's necessarily overstating his point, but he's certainly not reticent in call it pushing back on, more extreme views regarding the pace at which that is expected to happen. He tries to inject reality into that story, time and time again, and is, an emphatic proponent of the oil and gas industry in general. And so, that Liberty has done quite well as a stock this year and last in a tough market environment. They're one of the major players in U.S. pressure pumping. They bought Schlumberger's North American unit a few years ago, and that kind of vaulted them into this top tier, along with Halliburton, Patterson, UTI, and ProFrac. And so, I was surprised to see the announcement or the appointment, but not, initially when I saw it. But it does make sense, certainly, given his, his proactive, like he almost has tried to assume like an industry leading role as a voice on this, a voice, what he considers to be a voice of reason in terms of injecting, reality and kind of diffusing some of the more extreme, while acknowledging that there is a climate issue, suggesting that it's not an emergency, or kind of, refuting some of those types of claims. And so I would expect him to be a champion of the industry for oil and gas here in the near term, while advocating for that transition and leading that transition to some extent as well. So, definitely an interesting character, one of the more interesting characters within an industry filled with characters, I would say. And given his vocal stance on the industry, I think he would make a logical fit there with in the Trump administration, given Trump's views on the sector, more broadly speaking.
Fantastic. Maybe a kindred spirit of sorts. Even though I cover the clean energy space, I have been mesmerized by the climate emergency discussion. You don't have to go back too far in time to a point where you think about this idea that this is a multi-generational problem, m- something that gets solved over the course of decades, not months, not years. I see great progress on the clean energy front and the energy transition, and I think it will probably extend under the second Trump administration because of many factors that actually don't relate to policy. But Talon, I want to come over to you, get you involved into the discussion, and I'm going to put you on the spot as well. So, one more political type question. I saw yesterday that incoming President Trump tweeted about, or maybe he didn't tweet, maybe it was on True Social or wherever he uses social media these days, but he mentioned this idea that uh, for any company or individual that wants to invest up to $1 billion or more than billion or more, that the administration wants to expedite environmental approvals for those kinds of infrastructure projects. And so, Talon, given that you look after some of the LNG players, some of the pipeline operators, infrastructure is such a critical component of what you're thinking about. So, and my sense is that probably a lot of your companies spend a lot of money, a lot of time doing environmental reviews. So, what do you make of this? And do you think that your industry can perhaps uh, move a little faster with this kind of thinking in the White House?
Yeah, I mean, it's certainly a positive stance, right? But I think a lot of it might be rhetoric because ultimately, you have to deal with the agencies. If you're dealing with certain projects building across state lines, it's still a lot more complicated. And I think, there is possibility for permitting reform or at least improvements on that front to make things happen faster. But I think it's going to take time, the years, months for certain things. There's different, buckets for this, right? Where you have LNG projects that have applications out. Do I think he can expedite some of those rather quickly, a matter of months? Sure. But some of those big, just saying that doesn't make it okay to build a pipeline like, the magnitude of MVP that took years in an act of Congress to get across. So I think there's still going to be a lot of pressure. There's still going to be a lot of activist pushback. It just may look a little different than what the Biden presidency was.
Okay, fantastic. Vince, let's come over to you. Uh, Do you make any interpretation of this idea of accelerating infrastructure investment under a second Trump administration? And perhaps since you really spend time thinking about the upstream side of the business, do we need more upstream investment at the moment?
Well, I think we do need it in certain spots. So if you think about associated gas out in Texas, out in the Permian, there has been bottlenecks there from time to time. There was most recently a massive bottleneck over at the Waha hub where prices were actually negative for quite some time. Matterhorn came on through. I think that's and correct me if I'm wrong, Talon, I think that's about a 2.5, 2.7 BCF capacity pipe takeaway, and that definitely improved basis out in that region. Those are the kind of things that we may need. Now, obviously, Texas is a little more investor friendly, but they're attempting to build something out in the Northeast where you have the massive Appalachia Basin, Marcellus, the Utica. That most likely is where any future bottlenecks will occur. MVP took a great deal of time to come online, and as was mentioned, you needed an act of Congress to get it through. But I think permitting, expediting of the processes, expediting any civic backlash, any community backlash, any civic suits. Those would all be beneficial, but it's still going to be quite difficult in those, let's call them bluer areas of the country, to put in any type of infrastructure to keep up with the production growth. Now, granted, the production growth going forward is going to be much more muted, especially on the crude side. Maybe you'll get 300,000 barrels of growth in 25 versus 24. On the natural gas side, growth will be a little bit more paced, I believe. But I mean, we saw just this week and periods of time where you have prices breach well above $3, and you saw that production come online, so much more responsive. The thing is, though, you're not going to see that outsized production growth during the first part of the shale cycle. So definitely much more muted, but we still need that capacity to backfill those needs, especially near the Gulf Coast.
Thank you, Vince. Very interesting. One of the things that perhaps there's some alignment on across all forms of energy is that even if you're wanting to build a wind farm or a solar farm, uh, permitting can be a challenge on pretty much any kind of energy infrastructure out there. And so, Scott, maybe let's come over to you on just this general sense around permitting as well. There was an idea in DC that was floating around when the Inflation Reduction Act was passed. Senator Joe Manchin had a companion bill that was intended to accelerate infrastructure permitting, and so maybe that gets dusted off. Who knows where that kind of thing heads? But Scott, just generally curious to check your pulse on kind of the infrastructure side of the business. Is permitting holding things up? Are there things that could potentially move a little bit quicker in your mind under a second Trump administration?
Yeah, no, I think there's always things that can that can be speeded up. I mean, these projects are inherently complicated, and whenever they're trying to design a route for a pipeline, it's going to go, if it goes across multiple states, everybody's going to kind of quibble about local issues and what have you, and some of that complexity can be dealt with quickly at the federal level, and some of it can't. And but certainly with Trump in office and with Chris Wright potentially as the energy head, I think that is certainly won't get worse. It probably will get better on the margin. I guess the real question is how much better. And so it'll be interesting to see what, kind of streamlining of red tape we end up seeing in terms of permitting of projects. What happens with FERC is probably an important variable there, and also what ends up happening with Nuclear Regulatory Commission and, with some of the interest in some of the nuclear projects, which are inherently very long cycle, and LNG terminals as well. We saw obviously the Biden administration implement the moratorium on permits, and those are now going to ostensibly move forward more quickly as well. And so, this all kind of greases the wheels and suggests that things should move forward more quickly on the margins. I guess the question really is, how much of a difference does that really make, right? And that remains to be seen, but certainly it's positive. I would expect it to be positive, and we'll see what some of these federal appointments end up looking like with Manchin. And I think there was a political overlay there with the Mountain Valley Pipeline, obviously involved with that particular decision. But certainly, I think we'll hear a lot of talk out of the Trump administration in terms of cutting red tape and accelerating projects and those things moving forward. But you can only do so much at the federal level in order to do that, I think. So a positive for sure, but I wouldn't expect to be too much of a positive. I mean, you can't really quantify that, but in any event, good news is better than bad news, right?
Okay, thank you, Scott. So before this call kicked off, we were actually on an internal call. There was a little bit of a discussion about kind of the dominance of the tech sector, the NVIDIAs of this world, and I think someone pointed out that energy is around 3% of the S&P 500 here at the moment. If you go back in time, let's see, in '08, it looks like it peaked out at around 16%. So perhaps that was the heyday. But with that in mind, I want to kind of circle the room here and just get a sense from each of you, kind of frame 2025 for us. What are the key issues? Is 2025 going to be a growth story for your names? Is it going to be sort of profit expansion story, or is it more of a batten down the hatches story? So Talon, let's come over to you. Kind of just broadly, when you think about 2025 and both the LNG names and some of the pipeline operator names, kind of, what are the big thematic issues? Is this an optimistic year when you kind of put on your thinking cap for your space?
Yeah, midstream, it's pretty steady growth. I mean, EBITDA growth, dividend hikes, 4 to 5%. CapEx should come down. CapEx rose this year for investment in a lot of the projects. Many will come online, facilitate some of that growth. But the data center optimism, the LNG growth, exports to Mexico, that's the opportunity, and that really drove valuations for midstream. It was a pretty strong performer this year. I would imagine that optimism carries into next year because a lot of the LNG will come to fruition, a little bit of the Mexico, and we'll see. I think AI and data centers will continue to steal some of the headlines, and LNG is a growth story, right? It's the growth story within traditional energy. U.S. exports should rise considerably with the addition of 2 more projects coming online. We see global LNG trade growing. This year it may be 1 to 2%. Next year it may be mid-single digits, 5 to 6%. Driven by Asia, Europe's going to grow because we see a more normal winter. If it ends up that way, storage will be drawn down further. Going to have to fill that up. So it is a growth story for the U.S. names that I covered. LNG, more steady growth in midstream.
Okay,
of course, there's. I was going to say, of course, there's risks there, right? You have the tariffs. I think the Canadian and Mexican tariff threat. I'm assuming that may be more rhetoric. I'm curious to see what some of your opinions are on that, because that would be pretty detrimental. And obviously, tariffs could affect U.S.-China LNG trade. But I'll end it there. See if anyone else has opinions on that.
No, that's fantastic. Maybe just a thought that we occasionally have Nathan Dean on from Washington D.C. and he's really smart on this kind of stuff. I'm in your camp, Talon, that I kind of think that the tariff discussion is probably a rhetorical purpose as opposed to something that we're actually going to see. But let's plan to get Nathan on before too long and have us break down his sense of how things are going in DC. Vince, let's just come over to you. Same question. Help us frame 2025 for your space. Is energy gonna hover at 3% of the S&P 500? You know, what's your take on kind of where that number's at today and where it's been historically?
Well, look, considering that it bounced off the the super lows of the COVID era, uh, I think is a modest positive. What I think is really occurring here is an understanding on the part of management teams that this is about retrenching. This is about appreciating the maturity phase of this shale cycle. The consolidation game continues, and we've said it many times on this program and other programs as well. In order to survive in a commoditized, very mature industry, is to get larger, and we will have uh, uh, fewer yet massively larger companies in this industry, and they will look more defensive with modest growth, modest production growth, controlling expenses via pulling synergies and efficiencies, enhancing productivity, which is the benefit of having scale through consolidation, and generating, which I think is the key for 2025, is generating free cash flow and paying that back in the form of base and supplemental dividends. I will say that buybacks probably become a little bit more in focus, especially given the fact that uh, balance sheets look so much better this year versus other years during the cycle. But again, I think it's more the same in 2025. What gets us juiced, what gets us more optimistic is things that Talon has said, the LNG trajectory, and if we can get um, more permits as opposed to fewer permits, that's really not the issue. The issue is how we can get this capacity online sooner in order to soak up that natural gas production growth. Pipeline flows into Mexico, that's also very important. And as you guys have pointed out very, very well this year, the AI component, which is really a big unknown, how much growth will be there for natural gas on a daily basis. But, I think natural gas overall, longer term, relative to oil, is probably the longer term winner.
Okay, fascinating. Scott, let's come over to you on the energy services side. Give us a preview of what you think 2025 looks like.
Yeah, I think like globally, we're looking at something like low to mid single digit growth for the sector. That doesn't sound very exciting, obviously. But the area that I think could surprise to the upside is North America, actually. And, this has been beleaguered the last couple of years. So the rig count's down in the U.S. over about 25% from the peak in 22. But I think that is all kind of known and has conceivably washed out. We're getting these updates from Chevron and Exxon here, and we'll work our way through that. And the growth in production obviously is slowing in here and abroad, but with North America, I think there's a couple of things that are interesting. Number one, the gas price is obviously well off the bottom. We're entering the season for heating, and Vince knows this obviously better than I do, but we are starting to see that come up, and as we see more of a call on gas from the export projects, maybe there's something to be hopeful about, with there being potential upside in terms of the growth there. And then, as I mentioned at the outset here, this investment in gas fueling by some of the pressure pumpers. I think we see some more opportunistic levers that some of these companies can pull to grow their businesses. M&A is another one that we could see from them. A little bit more of that in the space, perhaps, given the growth profile. And then looking overseas, there, I think incrementally we're a little bit more downbeat in terms of the expectation there. And while growth could outpace North America, overseas, I think it probably slowing at a faster pace. And whereas North America, could be comparable to this year or maybe even better than this year. And so the big surprise to the downside really was Saudi suspending their capacity expansion plans, production capacity expansion plans, which prompted the release of 30 offshore rigs and some onshore rigs as well in the regions, created some dislocation and excess supply in the offshore drilling market, and has weighed on that sector this year. And I think that remains slow to the middle of 25 at a minimum. And so as we see that come down, and as we see the OPEC plus production cuts extended, that is another depressing factor for the international markets as well. And so overall, maybe a little bit more excited about North America, at least versus expectations, than we are about international markets to start the year. But I think overall, we're looking at something like low to mid-single digit growth is probably a reasonable thought for global upstream oilfield services activity. And we'll see if we get better than that.
Okay, thank you so much, Scott. Very cool. So just a quick bit of housekeeping. So we will hold this call next week. Different set of characters from the team will join. Then we're going to take a couple weeks off and we'll resume on January 8th. We do have a question in the chat, which I want us to get to. So anytime you're on, maybe I'll just ask whatever the heck's on the top of my mind, but better for you to sort of feed us your questions and we'll try to answer them. So with that in mind, the first one is, Rob, can you turn the lights on the tree? The lights are actually on, but I've got lights coming on me, so you just can't tell. Sorry about that. But for a serious question, Talon, we've got one on LNG, and so I'll just read it. My understanding is that Europe's demand for U.S. LNG is driven by limited LNG storage capacity and harsh winter concerns. Is that mostly right? And then a follow-up is, what are the general drivers of Asian demand for U.S. LNG?
Yeah, so in Europe it is, it's driven by weather. So last year, the end of March, they finished with stockpiles 60% full, and forecasts we're seeing from the third parties, but also our colleagues here in BI, that assuming a more normal winter, that could be 40%. So that could be an extra 10 to 15 million tons of LNG that has to go into Europe as they try to build storage back up next year. Even right now, I think last time I checked, storage was 82% full, which is pretty high, but that's still below the 5-year average because there was some pretty sharp withdrawals with the weather. So, the weather is certainly going to drive that. And then you have the end of the transit deal through Ukraine. That's most likely going to end at the turn of the year. We'll see if some kind of agreement can eventually be had with that, but that's where Europe stands. With Asia, it's China, India, Taiwan, Thailand, whether it's more regasification capacity, more import terminals that open, which is the case with India. They just had another one open. Demand there for gas to replace coal and other dirtier fuels is there. So Asia will continue to be the main driver of growth, whether it's from the U.S. or other suppliers. But definitely Asia's the driver, and Europe will just have to rebuild storage to get back to the 90 to 100% come the start of next winter.
Fantastic. Thank you, Talon. Vince, we had one more question come in that I think would be good for you. just curious to get your thoughts on the infrastructure build out specifically in Appalachia.
Yeah. So look, I think it's going to be pretty difficult to get a greenfield project up and running. It's going to take, um, I wouldn't say similar to what we saw MVP go through, but expansions are a different story. But new projects are going to be quite difficult. The good news is that we're not really projecting sizable growth from the Appalachian Basin, specifically the Marcellus in 2025. All the operators we talk to, or all the operators that have given hints and indications about 2025, we're looking at really modest growth, if growth at all. So a lot of the folks are talking to us about, and these are the publicly traded names, right? They're talking to us about maintenance capital, maintenance spending, to keep production levels at similar to slightly higher levels of 2024. It's the private guys that are really jerking the production growth in those areas. But quite frankly, you're really not going to see that production cadence grow much in 2025 and even in 2026, quite frankly. But at levels of around, I mean, nat gas, Henry Hub popped another 6% this morning. You know, you're not going to see that reaction of the outsized production growth that we saw earlier in the cycle. That's not what the investor base wants. The investor base wants more muted production. They want that free cash flow back in their hands. And I think those are the keys to 2025.
Fantastic. We have one more question come in. With Google announcing quantum chip Willow, how will that affect the energy consumption? Quantum chips versus NVIDIA chips. We haven't had a chance to really unpack that yet, but I will say that, we kicked off this call with Reacts and some discussion around that. So our analyst who covers Google or Alphabet, Mandeep Singh, put out a react on that chip, and I'll just read the first sentence. Google's quantum chip breakthrough suggests the company's chip advantage on the data center side with its own tensor processing units is likely to expand versus other large tech companies. But we will certainly circle back around with Mandeep and some of the folks on our technology team to think through that. This has been a big theme. Everybody knows, or I think probably everyone on this call appreciates that there's a very interesting angle or energy angle on the AI story. These things consume a lot of power, and how that power is going to be provided is still a big uncertainty. So we'll certainly be watching this development here and coordinating with Mandeep and others on his team to bring some insights there. But we haven't really had a chance to unpack it there. But I'd say stay tuned. Probably this is a good place to end. So I want to thank everyone for their time. Please do join us next week and then reconvene with us in January when we kick things back off. I hope everyone has a great rest of their week. Take care, everyone.
Bye-bye now.
Thanks,
Thank you.
Vince. Thanks, Talon. Thanks, Scott.